Yeah, good evening, guys. My name is Yisao Kamaldin. Welcome to my YouTube channel and welcome to the Trade Trends episode 3. So, let's go over to the chart and see what's going on. So, in our last Trade Trends episode, we forecast that the the GBP USD is going to come to this demand zone right here. If you don't know how we go about that, you can simply check the last three trends episode for the full analysis. So the our the market is right at our demand level now, at our supply level now. All we just have to do is to wait for a confirmation candle. So that's how we are going to be profiting from this market right there. So all we just have to do, we've go over this in the last three trends episode, from the monthly time frame to the weekly time frame, and now we'll go about it to the daily time frame. So kindly check the last three trend episode to see what's going on, to see how we arrive at it. So now what we just have to be doing is to wait for a confirmation candle for on the daily time frame. If you should see a bearish candle, actually we are supposed to enter with 4 hours candle, maybe like a bearish engulfing candle on the 4 hours time frame, but that would be a lot. We need more confirmation, guys. We need more confirmation, guys. So we should have entered on a close of bearish candle here. That's where we would have entered, but we still have to wait. We need more confirmation, guys. You know that we want to, what we want to do is that we want to gain thousands of pips or hundreds of pips with smaller stop loss. That's just what we want to do. So what we just have to do now is to wait for a a confirmation candle on the on the daily time frame. Let me check the risk to reward. Maybe it might be something great. So if I should check, like our overall target is at 1.2191. If you don't know how we analyze the market and to forecast the po ten tial target, kindly check the last three trends episode. So this is our where our overall target should be. So if our stop loss should come above here. So this is about like 4 to 3 risk to reward. And if you ask me, which is very great, within this 4 to 3 reward ratio, we will at least we will have another entries, maybe like two or more three entries to enter the market, which can help us maximize our profits. So what we what we just have to do now, what we are doing now is to wait for a confirmation candle from the daily time frame. There is no need to rush, guys. We don't have to rush. The market is not going anywhere. We don't have to rush, so we just have to wait for it. Then if the market should give us a confirmation candle on the daily time frame, if we should enter from here, there will be another opportunities for us to enter on this break of this counter trend line, and also when we clear this neckline level here, because this was a double top, and it break through the trend line, and the market is testing inside of this zone here. And if I should use my Fibonacci level from swing low to swing high, if I should you can see that it is right on that level, 618 level, guys. So you can see that it is right on that 618 level, guys. So this is everything is pointing down. In short, everything is pointing down. If you don't know how we arrive at this, kindly check the last trends episode. So this is it on GBP USD. Let's go over to the Euro USD. Let's go over to the Euro USD. So it is pretty much the same thing on the Euro USD. So on the Euro USD, let's go, because I did not analyze Euro USD in our last trade trends episode. So let's go back to the monthly time frame and see what's going on the monthly time frame. So this is pretty much the same thing. This was a double top and a break through the double top, and the market is currently testing the neckline now. If I should put this level here, you can see that the market is currently testing the the neckline. You can see the market is currently testing the neckline, and if at all the market is going to reverse, it will at least give us like a double bottom here. The market can't just reverse and go up there. No, it will at least give us like a come back down to form a double bottom, or like an inverse head and shoulder. So this is pretty much it on the monthly time frame to give us a clear direction that the market is pointing down. So let's go over to the weekly time frame. And again, guys, sorry, I did not mention this. If you should check the Fibonacci level from swing low to swing high, from swing high to swing low rather, sorry guys, from swing high to swing low, you will see that the Fibonacci level is right on that zone. So we are in for a Fibonacci play. You can see, guys, you can see that we are in a Fibonacci level. So this is more or less like a conference to you that the market is pointing down. So let's go back to the weekly time frame and see what's going on the weekly time frame. So this is the weekly time frame, guys. This is the weekly time frame. The market is in a range now, and it has formed like something like an head and shoulder inside the range rather. So this is like right the right head. This is like the right shoulder. Sorry, guys. This is like the right shoulder. This is like the head, and this is like the left shoulder. So if at all we are going to, like, we've already forecast the market to come down here. If at all, if there will be any change in trend, but then again, the market might not be ready to go down. But there's one thing about the range market is that if it should touch the resistance level and the market reverse, it will touch the support level before going anywhere. If at all it is going to break through the resistance level, it will at least come and touch the support level, and the support level inside this range in this case is this level here, this 1.0500. So this is we have about like po ten tial pips of about like 350 pips, guys. And this is, you know that if we, like we said the other time, this is the right shoulder head and the left shoulder. So the left shoulder is here to compete. It will at least come to the neckline, guys. This is more like I'm giving you guys the confidence to it that the market is coming here. No doubt, I have no doubts. I'm 100% sure that the market is coming here. So this is it on the weekly time frame. I think I've pretty much shed more light on why the market is coming down. So let's go back to the daily time frame, and where we check the immediate trend of all the overall trend, and where we find our potential um po increase. So this is it on the weekly on the daily time frame. If I should use my Fibonacci, you guys know I like to use this Fibonacci to a lot. It works like magic, and that's why I love to use it. It doesn't fail. If a Fibonacci level should, trust me, guys, there is nothing stopping it. So what's going on is that the market is trying to play a Fibonacci level here, but we can't be too sure. We don't have to rush. There was also a supply level right about now. So this is like three confluence to it, because there was a resistance level. This resistance level, you can see I highlight it with my green level. You can see. So this is like three confluence, and we've already pretty much did the analysis on the monthly, and also on the weekly to to add to the conference to confirm our bias that the market is coming down. So like I said, the Fibonacci level, this is it is right in our Fibonacci zone here. The market is right in our Fibonacci zone here now. So and there was a let me scale down to the to the 4 hours time frame to draw the supply level there. There was also a supply level. So this is making it like a conference, and with a conference with also the with also the with also the Fibonacci, sorry guys, with also the Fibonacci level. So this is like the two conference. So what we are going, the last conference we will be waiting for is the candlestick conference. So we just have to wait. Actually we should be entering this market if we should see any like a bearish engulfing on this 4 hours candle, but if we should enter like that, that would be a bit very early. But if you are if you are an high risk taker like me, if you should see a 4 hours engulfing candle, bearish engulfing candle now, you should, if if it should close and it covers the previous green candle, you should be selling guys. And if you should sell from here, that this will be a good risk to reward trade. This will be a good risk to reward trade guys. Your stop loss will just come above the zone here, and your overall target will be, this is eight eight to one to eight risk to reward, which is very great. If you are risking 2% of your account, trust me guys, you are making 18% on this trade. And one good thing about it is that you are not only making 18%, you are not only making 16%, you at least find another trade within this trade. Like now I am seeing a potential opportunity to draw a counter trend line. You guys know I like to use counter trend line as my entry strategy too. So this the this is also an opportunity. This will also be an opportunity for us to enter the market. And the zone should come here. If we should break this level here, we'll be capitalizing on the day too. So there is a lot of opportunities there. What we just have to do is to wait for the confirmation candle on the daily time frame or 4 hours time frame. Then we sell the market. We sell the market guys. It is pretty much very simple guys. So I will just have to delete it now. I will be waiting for the confirmation candle. Once I see the confirmation candle, I'm selling guys. If I should see the confirmation candle, I'm selling guys. So that's pretty much it on trade trends episode 3. So next week we'll be going over the AUD USD and NZD USD. The the pairs, we'll be going over that next week. So that's all for today. Make sure you subscribe to my YouTube channel. Thank you guys. Yeah.